Joining us to this afternoon, Aaron Brown, portfolio manager at PIMCO, talk some rates as well as financials, Aaron. It's great to see you. I know we got most of the bank earnings out of the way. Cramer's going to talk to Moynihan, I think, tonight. But there doesn't seem to be a lot within the industry in terms of trends that get you very excited.
I think that as we move later cycle, and given how flat the yield curve right now, it is a difficult operating environment for the financials, particularly for the brokers who had a real wave of benefit over the last 12 to 18 months because of increased M&A opportunities and increased issuance, in part from the SPAC wave. And I think as we start to see that die down, it is going to be a more challenging environment ahead. And for the broader banking sector, I also think that as we move later cycle and as we see lower loan trends going forward, that also creates some headwinds to the industry overall. So while, there are certain segments of the cyclical market I like, it's not financials.
All right. And instead, it is something like what?
Well, I think that commodity-oriented sectors, particularly the mining sector, is really poised to do well. We continue to see both cyclical as well as secular tailwinds, which I think will continue to boost increased commodity usage, particularly for those industries that are more geared towards ESG, like copper. I also think that the industrials have underperformed year to date, and certain segments of the industrial market, like machinery, should also start to perform well, particularly as we start to see infrastructure spending ramp up. And so I think that that's certainly a better place to be. Also, I think that within, more of the cyclical-oriented parts of the economy, the reopening sectors like leisure and hospitality, I think, are going to do really well. The mask mandate being, sort of overruled in court, I think really sets up well for increased summer travel. And so those, laggards which have underperformed, like some of the hotel names, some of the leisure names, I think will do really well as people start spending their money more on services, more on activities and experiences rather than on durable goods, which we saw as people were sort of locked down during the pandemic.
Right. And that's really why you've got your overweight in travel, hospitality, and yet the underweight in consumer discretionary, because you're really banking on that wallet shift, it sounds like.
Yeah, and you've actually started to see from early earnings reports some of that shift occur. You're seeing it even in early indicators from the trucking sector, which has underperformed year to date, largely because the rates and the contract rates and the volumes and the shipping and freight rates have gone down significantly because people are spending less on furniture, on durable goods, on appliances. And I think that as you start to move through the summer months, people are going to be spending any discretionary dollars that they have, the tax rebates that are coming through on summer experiences, on travel. And so that's where I think that consumer dollar is shifting towards. And I really want to be really poised to take advantage of that in my portfolio.
Yeah, we definitely saw evidence of that today. We bought everything, apparently, and it's time to start moving around. Aaron, thank you. Aaron Brown joining us from PIMCO.